Ladies and gentlemen, good day and welcome to the conference call for analysts and investors for post-results discussion for quarter 3 financial year 2021-22 of Arvind Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I would now like to hand the conference over to Mr. Sameer Agarwal. Thank you and over to you, sir.
Thank you and good afternoon to all of you. Thanks a lot for participating in this call to discuss the financial results of Arvind Limited for the third quarter of financial year 2022. Joining me today is Mr. Jayesh Shah. He's our Group Finance Director, as you all know, and also Mr. Kaushal Shah, who is our Investor Relations Officer. To get started, I'm very happy to report that during this quarter, we crossed the 15% ROCE mark. We have discussed, a few times as to, we wanted to kind of get there, and we are here, so we are really pleased about that. In this quarter, we clocked the highest ever earnings for the current portfolio of Arvind Limited businesses. Similar to the second quarter, the business in this quarter was characterized by a surge in volumes across all segments and also in tandem the high input prices of the raw materials. Most of our businesses secured price increases to offset the cost increases, and that helped us maintain the unit operating margins, although in percentage terms it may look a bit diluted. Overall, the revenues for this quarter, the third quarter, stood at rupees 2276 crores, which was 50% higher than the previous year same quarter. EBITDA stood at 236 crore rupees, which was 46% higher than the rupees 162 crores which we reported last year in the same quarter. PBT stood at 142 crores and the net profit after tax was at 95 crores. So we had indeed a very, very good quarter, and like I said, this was the highest ever in our history. So we are very happy about that. Talking about the segments in a bit more detail, the textile revenues were at rupees 1917 crores, which was 57% higher than previous year. Almost 25% of this growth on top line came from the improved price realization. The remaining was the volume growth. So similar to the second quarter, like we shared with you, denim again shipped out 25 million meters, so it continues the momentum in terms of volumes. Wovens showed a very strong growth and it shipped out 35 million meters this quarter, and this was largely driven by a very sharp increase in the export volumes. Garment volumes improved to 10 million pieces. Apparel demand in general continues to stay buoyant across all segments in our market. Most global retailers and brands have reported full recovery, to the pre-COVID levels. And in some cases, the ones who are doing better are even reporting 5 to 10% growth than their best ever Q4 2019 numbers. Similarly, the top domestic fashion brands and retailers continue to deliver strong volumes, and all of this has resulted into an overall strong demand for our fabrics and apparel both. On the input cost side, pressure stays strong. Cotton prices have zoomed to a level which is kind of historically high, both internationally as well as in combination of demand supply as well as speculation going on. The global demand for the cotton continues to stay at 24 million bales plus, and like we shared last time also, there has been some degree of disruption in the supply because of the weather patterns in some parts. And more importantly, while the cotton is there, this continuing challenge with the global shipping and supply chain, it still continues to impact the local demand and supply. Other raw materials also continue to command high prices and again are partially driven by higher freight prices because some of these things are imported from China and other places and the freight costs get added. The good thing is that we have been able to pass on most of these cost increases, and as a result, the textile EBITDA was strong at 11.4%. Average price realization for denim stood at rupees 226 rupees per meter, and woven was at rupees 185 per meter. The ROCE in this business, the textile business, stood at nearly 23%. Now, talking about advanced materials a bit, A&P grew by 42% compared to the Q3 of last year, and it clocked the revenue of 267 crores. As I had shared in the past, AMD has three parts, which is, human protective apparel, industrial products, and composites. And all three segments of AMD saw very good scaling up of the key accounts, launch of some high-value products, and overall good growth. With the margins in AMD stood 30%. Net borrowing came down further as we had planned and guided by about 150 crore rupees during this quarter, and we closed at 1723 crores as of December end. As a reference, just to recap, we had started the financial year at 1950 crores borrowing, which had increased to 2141 crores during the end of first quarter, and it continues to come down sequentially. So looking forward in near future, we expect that the demand side and the cost side factors both will continue to play out the way they have been for last quarter or two. As such, we expect Q4 to deliver similar top-line profit numbers as Q3. We also intend to continue our efforts to dial down the debt through the next quarter. That concludes my opening remarks, and we'll be very happy to answer the questions. I invite you for the same. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nihal Jham from Edelweiss Stockbroking. Please go ahead.
Yes, thank you so much and congratulations on the great performance. Three questions from my side. First one was that have we taken all price hikes that were required? I know we are guiding for similar margins and a similar revenue trajectory for Q4. So would assume that would be the case, but just if you could throw any highlight, maybe something has happened post the end of the quarter till now, which may still require some intervention from our side.
Okay, this is your first question. So the price increase, is a cost increase rather is a continuous, phenomenon right now, unfortunately. So even post the Q3, there has been, so in November, in December, there have been price increases of cotton and some of the other inputs. So we too are changing our price with our customers. So it's a continuous process. You continue to remain, lag behind for a few months. But yes, to answer the question, there may be a little bit of an increase in prices of our products, even in the coming quarter.
Sure. Jayesh, if I may just ask something related to this, was that it is very heartening to see that we are able to take such strong price hikes. But do we have the bandwidth to keep taking those as things keep happening, or this is maybe the end of the price hikes we can pass on to customers? And post this, maybe we'll have to absorb some of the inflation.
I mean, it will be difficult because the price increase is,
It is made of three parts. To simplify it, there is what we call human protective apparel, human protection, which is a little bit more than half of the AMD top line. And then there are two other segments, which is the industrial belts and filters, and then composites, which are 25% each, right? So that's kind of how the top line stacks up in terms of the importance, right? Now, the one thing I just want to kind of clarify is that because the question you have asked, I have been asked in the past as well. AMD is a bundle of multiple businesses and multiple products which go to different markets. So it's not like there's an AMD market like a denim market where there's a given market size, right? So it's going to be hard to say that, what's the market size and what's the share of market. Having said that, I think let me kind of give you a flavor of each of these businesses. So human protection really makes a lot of different kinds of workwear and protective apparel, which sometimes goes to people like firefighters and defense personnel, right? Globally, there are two kinds of customers which buy these products from us. Either these are, brands which sell under their own brand name and they simply white label from us or there are laundries which provide apparel services as solutions to large corporates and other establishments. And again, for them also, we supply as a white label unbranded product, which they kind of, take it as a input into their business model and then go on. So this is very much a institutional B2B business, and where we are is in last few years, we have established a core set of customers. Many cases, these customers don't want to be named for different reasons, right? I mean, many of them don't want to be seen as sourcing from outside local market, etc. But from our perspective, the important thing is that we have a very stable customer base within which they are increasingly getting comfort about quality and supply side reliability. And during this phase, we have also cleared a whole lot of certifications because many of these products require you to undergo a fairly rigorous testing and certification process. Many of them last for multiple months and multiple quarters. So that's the kind of business which human protection is. And like I said, the big agenda there is to keep scaling up, and we've been quite successful there. And that's how it will continue for next few quarters as well. In terms of the belting and filtration products, again, these are both woven as well as non-woven products coming out of our factory. And like I said, they go into two broad applications. Either they are, coated with few different compounds and made into, conveyor belts, etc., or they are, deployed into different kinds of filtration, either a hot gas filtration or liquid filtration or some combination. And again, in terms of the customer base, largely export oriented, there are overseas distributors and overseas converters which convert these into actual filtration products, or in many cases there are filtration service companies which buy these products from us. And in that sense, it's very similar to human protection. It's a B2B business. There are established accounts where they have loved our product and they've been using it for last several quarters. So we are in a place where we are growing that business up as well. And the last piece is composites, which is taking our fabric capacity which we had since 2012. We have gone downstream, and there's actually a website which we have put up in last couple of quarters called arvindcomposites.com. So if you click on that, you'll get all the details of the different product markets. But in summary, it goes into a variety of downstream applications where composite offers an alternative material of construction to metals. It's a much a better corrosion resistance and so on. And again, this also is a B2B business. We supply to large cooling tower guys, telecom fellows. We are making parts of metro rails, and then more recently we started making some sports goods as well, which gets us into the carbon fiber zone. So the attempt here is to again try and move towards higher and higher value products. So what we have done is we started with a fairly basic composite material set about 4-5 years back. But a lot of products which we used to kind of delve with in like 2015-16, we don't even produce that because we have continuously improved our capability and so-called moved the value chain. So that's kind of the flavor of the three buckets we have, and each of them competes in a different product market. So I'm going to pause here and see that gives you some flavor, or any more questions.
Oh, no, that's very comprehensive. I got the idea. And if I may squeeze one final question. Sir, your ROC seem to be individual, like textile and AMD segment, ROC seem to be high, but overall also very good. But I believe it is because of the other business segment impact of other business segment.
Let me explain to you. So it is not strictly because of the other businesses, and in other businesses relatively smaller. However, we have a few things, like we have over 100 crores of tax which we have to MAT credit that is sitting there. Also, we have about 450 to 500 crore of land which gradually is being sold. So once this so-called other non-productive assets are out of our books, you will see an immediate jump, and that's why I, in the earlier question of yours, also mentioned that we would want to look at significantly growing not only our margin but also return on capital employed. So that is the reason why I told you that.
Okay. Thank you, sir. That's all from my side. I'll come back in with you.
Thank you.
Thank you. The next question is from the line of Kriti Jain from Canara HSBC. Please go ahead. Kriti Jain, your line is unmuted. You may please go ahead with your question. As there is no response from the current participant, we move on to the next question from the line of Prerna Jhunjhunwala from B&K Securities. Please go ahead.
Hello.
Yes, ma'am.
Congratulations, sir. Congratulations, sir, on strong set of numbers.
Thank you, Prerna.
So I just wanted to understand your Q4 guidance on why we'll see similar top line when there will be some price increases across products. And there is room for...
I'm sorry, Prerna, I didn't get your question. Can you please repeat for me?
Yeah, I was just trying to understand your Q4 guidance on why revenues will remain at similar levels when you will see some price hike across products because of cost inflation, and there is room for capacity utilization improvement in garments and AMD as well. So just wanted to understand why it will remain similar. It can actually increase from here in Q4.
Sure. So, Prerna, it could, the quarter 3 has been one of the exceptional quarters also for woven division, and generally to do a 35 million year quarter on quarter because of even seasonality changes is not something which we can plan. It can happen, but we cannot bank upon it. Generally, the sales would be around 32-33 million. We would aim for higher, but that's what we budget right now. Similarly, in to do 25 also is not something which we can bank on a quarterly basis. It can be 23, 24, 25. So, but we have to budget for something which we can definitely achieve and give that guidance. On garments, yes, capacities are there and we will be growing. Also, there are, different products that we sell for different, seasons. And the prices and the product mix also undergoes a change every quarter. And that's why also the product mix-led price changes may also happen. You may get the higher price for the same product. We may also, average may not rise as much as we otherwise would. The price increase may show that the price, the overall average should rise. So that is why the turnover may be similar. It may be 5% lower or higher than what it is today. But we believe that it should be in the ballpark similar range.
Okay. That answers. So second question is on the water business. How has been it this quarter, and what is the general outlook on this business now?
So water business has been quite good. In fact, demand pickup is now very good. We have been able to win some large orders. We in the past have done a single order which is of 100 crores. We have been doing 50, 60, 40 crore orders. We have just won an order which is over 100 crores. So it is moving in right direction after 2 years of COVID and where it's a issue that is affecting all the players and not only us. So to that extent, if there is a inflationary situation, some of a price increase will have to be done. Of course, these price increases are never one-sided. There has been some bit of an absorption by us also. Otherwise, we would have got a significant, I would say, operating leverage with this kind of volume surge, which you don't see. So there has been some bit of an absorption, and through productivity gains, through efficiency improvements, through changing in product mix, you have to keep, adjusting and looking at customers' needs. You have to keep adjusting your contribution, your pricing, your products, and then try and optimize the situation.
Understood. That's why the second question was that in your commentary you do mention of the domestic segment of being very robust. The only observation here being that both for wovens as well as for the denim segment, volumes are still at 75 to 80% of pre-COVID. So when you say robust, you're saying how it is performed versus Q2, or are there some other parts which you're including which is giving you this
So we are both looking at the what has happened and what we are seeing as an order book. What we are seeing the customers' inquiry for the following periods. So in general, despite the Omicron issue, unlike in the past, the demand continues to remain reasonably stable. It has not collapsed the way it did in the earlier wave 2. That's the reason why we said that the demand remains strong as compared to what we had seen in the past.
This is helpful. This makes it clear.
Yeah, Jaydev, can I add to this on this domestic demand piece?
Sure.
Yeah, just a comment. So, Nihal, what's happening is, just to give you a bit more flavor, right? If you see, there's obviously a top national brands, in both denim and woven category. And then there are 2 tiers below that in terms of market. There is a super regional or a strong regional player bracket. And then there are really small ones which are almost like unbranded local players. So what we are observing is that the real small local ones are the ones which are really getting hosed. In fact, a lot of the business is now being picked up by these regional and subnational players who are becoming much stronger. So that's the dynamic playing out, and frankly, structurally that favors us because that's the segment which engages a lot more readily as compared to the lower tier. So that's just 2 cents to add there.
No, that's very helpful, Samir. That does give further clarity. Last question from my side on the debt part. The reduction is something that's been very significant, and congratulations on that. Could just break up if there has been any proceeds from the land sale, and thereby also for the year ahead, what is our expectation from land sale, and if there is any unutilized land bank which we are contemplating to monetize to reduce this further.
Sure. So there has been over last 9 months, we have been able to get about 85 to 90 crores from land sale. Some of it has come in Q3 as well. However, in Q3, one of the reasons why you see a little higher reduction is that our tax payment was much lower as compared to what you see as a book tax, which is provided on 35%, but because we have been paying advance tax and we are in the MAT region, we don't pay 35%, but we pay 20%. So to that's 17.5%. So to that extent, though, it's much lower than what we see as a tax provision in the books. So that's another reason why you had surplus, more surplus than what is seen on the reported number. We did have some fixed assets, so land sale, and we'll continue to sell more. I think another, you could expect at least 100 to 150 crore of sale happening even in the next financial year.
That's very helpful, guys. I will come back to this.
Thank you.
Thank you. The next question is from the line of Biplab Dev Verma from Antique Stock Broking. Please go ahead.
Good afternoon, sir. Congratulations on the presented results.
Thank you.
Sir, first question is on your capacity utilization. Sir, it looks like you're running 100% capacity utilization in denim and woven, if my reading is correct. If that is so, and if we see the revival in demand, what would be our next step? I remember in the previous Concall mentioning that you are not very keen on adding capacity. So, and you may outsource it. So if that kind of scenario arises, what will be the margin in outsourcing? And because there will be some margin contraction in outsourcing. So that is my first question, sir.
Sure. So I think two related questions would be, how are we going to plan for growth in the coming year across various segments, and what is our thought process on the capex? So let me try and broaden the question or answer so that it addresses not only your question but some of the other related issues. So we believe that the textile industry is seeing a tremendous growth opportunity. Both as we just spoke, Indian market, particularly the organized retail, is growing at a very fast pace, and there is definitely a global shift in demand which is now real. So we will also grow in select areas such as garments, advanced materials, and fabrics of man-made fibers. So we are in the process of putting together our capex plan. Overall, it may be over 300 crores over next 18 to 24 months. We will be spending on augmenting our woven capacity. We will be augmenting our garment capacity, and we will be augmenting our AMD capacity in different segments within AMD. And whatever is part of PLI in this, which could be some of the products would be part of PLI, some of the products will not be part of PLI because they have restricted some of the HSN codes in the PLI scheme. So whatever fits within that, we will apply under PLI, and balance we will apply or do outside the PLI. So this is our overall thought process. There will be some bit of an outsourcing, some of the intermediates we may be buying. Even now we do that. So that's the focus will be both on margin and return on capital employed, and with that as a barometer, we will aim to continue to grow and take advantage of the tremendous opportunity and the demand surge that you see in the global and Indian market.
Jayda, if I can just add to that, there was a second part of the question around if we outsource, there may be a margin dilution. So just to kind of
no, that's what I said, that there would be some margin dilution on outsourcing. You will gain on operating leverage as well because some of the fixed costs will remain constant. Also, there will be, even though there may be a margin dilution, there may be an ROC uptick on that. So it's a combination of all of this. It will be difficult to today give you all the concrete numbers because we are in the process of budgeting. And next time when we meet, we will have much more clarity on all of these aspects. But I'm directionally telling you that this is how we are looking at growth, margins, capital employed, and also continue to look at or focus on reducing debt year on year.
Okay, sir. That's great. Second question is on your AMD segment.
Yes.
So, my understanding is that AMD segment would be primarily driving the growth part, and it has been growing significantly, good margin. If you could provide some insight. I know you have three segments. I just try in terms of insight, as in each segment, how much they contribute, and who are the top five players, how big the market, export market is. So because AMD is a totally new area. So if you could just briefly, so that we can go and research further.
Sure.
Yes,
So Samir, maybe you want to take up and I'll add.
Yeah, sure. Thanks, Jayda. So if you see, like you said, AMD
The demand or the new order booking was slower, and so was the execution. But now it is picking up, and we see a good, robust pipeline for next financial year.
Okay. So what would be the size of this water business? This is just a follow-up on this.
Around 220 odd crores this financial year. It has been stagnant and in fact has gone down in last year, but it is now inching up to over 200, and it should be at 20-25% or 30% growth next year.
Okay. So my next question is on this interest cost. The interest cost still remains higher, around 9.5% if you calculate on net debt basis.
Sure.
So
yeah, I will explain to you. So this interest cost includes certain portions of cost which is not relating to the debt alone. For example, we pay or we do very large amount, some between 200 and 300 crores of we factor our export and domestic receivables. So we sell out our receivables and whatever is the cost, we book it in interest. So that is another cost that comes, though it is not a debt, that cost does come in the interest. Again, this quarter, we have, compared to last quarters, we haven't taken any credit for the interest subvention, which otherwise was available till last quarter, because the scheme has yet to be announced or renewal has to still to be announced. We believe it will come in next 1 month or so, and if and when it comes, we'll reverse that cost, which is about 4.5 crores.
Okay, which means our net interest actually is around 37 odd crores, which is
36 crores. 36 crores.
Okay. Understood, sir. Yeah. Thank you so much, sir. I'll come back to the question.
Thank you.
Thank you. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Congratulations for good set of numbers. So on the finance, broadly what I'm trying to understand is that on the working capital cycle, we worked with close to 65 or 66 days for last 2 years. And this year, the anticipation is that since the cotton prices are ruling extraordinarily high, building that kind of inventory, which is the historical trends, probably will not be possible for the sector this time, and the availability of cotton is pretty low. So how are we going to see, the working capital cycle this year and maybe some sustainable numbers going ahead, purely from that sector?
So working capital cycle, as we speak, has remained similar to what we have seen. In fact, it has marginally improved in Q3. As you know, the cotton prices are at a historical high. And currently, because of the reasons that my colleague Samir mentioned, that there is a logistic challenge, there is a import duty on cotton in India, there is a very high demand of textiles and leading to higher consumption of cotton. So because of these reasons and a lot of money flowing into cotton from various funds because of the US interest rates, these reasons may or may not stay long. And as a result, we currently are hedging our cotton basis the order book that we have for sale, so that we are trying to match our sale and the purchase and not take any extra position, because cotton can, like it has gone up very sharply, can also come down very sharply, and you may get caught into the reverse cycle. And so rather we would play safe and only buy to the extent we have an order book on the demand side. So we don't see any significant change in the working capital cycle for this financial year.
Okay, got it, sir. Sir, my next question pertains to AMD segment. This particular segment is, I would say the most efficient return on capital employed, generator for the company, because if you see the dynamics, it can generate almost 3.5 to 4x kind of, asset turn, and then close to 13-14% kind of margins, which is far better, as compared to our fabric and maybe to some extent the garment segment also. So as you rightly pointed out that you are augmenting fabric and to some extent garment and the AMD, but sir, to go from this 1,000 crore kind of annual run rate of, technical textiles, and we are seeing government is giving a lot of sops in this particular segment in terms of PLI thing. So any broader, capex, some big capex, because you are guiding this 300 crore, which can give us, let's say, 1,000 crore or maybe 1,200 crore kind of top line, even if we believe that it completely goes into AMD segment, and you are seeing a lot of new segments which are emerging, on the AMD side. So how we are going to get the bigger advantage, given, such a smaller capex that we are guiding right now. So if you could broadly guide us from 2 to 3 years perspective, where do you see this AMD business? Because logically it looks that, Arvind is the leader in this segment, and if any company, then we can visualize from a technical textile perspective today in India, the Arvind comes first in our mind because of the seed size of Arvind as on date. So how do you want us to guide us from a broader longer term perspective in that segment?
We already, Mr. Bhadram, I think Swami did already answer that question, but let me repeat that we are looking at a growth of about 25% plus in AMD year on year. We are not looking at a 50% annual growth or a 75% annual growth from AMD. It's not even practical. There are the demand generation on AMD side is a slow process because it's a technical product. It doesn't happen like a fashion industry. So it will take its own time, but whatever we do, it will stay and be sustainable on a long-term basis with margins continuously looking better. So I think our growth plans we have already described for all businesses put together. Each one of them in detail we will explain when our budgeting exercise is over. But as of today, it seems that AMD will surely grow at that level.
Okay. And so my last question is about tax rate. We are still, from a reporting P&L side, we are still at, far higher, close to 35% kind of.
It will be similar percentage next year. After that, it will become 25.
Okay. So in FY24, we'll come back to the normal rate of 25% from a reporting perspective.
25.
Okay.
Yeah.
Thank you very much and all the very best, sir.
Thank you.
Thank you. The next question is from the line of Sagar Parekh from One of Finance. Please go ahead.
Good evening, everyone, and congratulations to the team for excellent numbers. Most of my questions have been answered. Just on this 300 crores capex guidance, so what kind of incremental revenue and margins can that generate broadly? Can we assume like 2 to 2.5 times gross block to sales to gross block kind of number?
Yes, it could be even more because we are investing at the last end. But I think, Sagar, honestly, it's still work in progress.
Sure.
I'm just indicating some broad top-down numbers which we need to work on and come back to you all once our board also looks at it sometime in mid of March. However, I think we have capacities within the company even now. Even if we invested nothing, there is a possibility of growing the business by 4 to 5%. On top of it, these investments will further help. So I think overall guiding 8-10%, of course, input cost related rupee sales may change because of the sharp up and down of the input cost and as a result the selling price. But assuming that remaining constant, we have headroom to grow with 8-10%, including this investment.
So I'm looking beyond FY23. So FY23 will obviously see growth because of the lower base of FY22.
I'm talking about 8-10% year on year. And this 300 crore is not the last so-called investment. We will keep investing, including in the next financial year for the next year following. So that additional incremental investments will keep happening. Also, our outsourcing engine is working extremely well. And, even now, if you see, just to give you an example, one of our divisions was shut because of some pollution-related, PLIs that was done in Gujarat, and then 300 units got shut and all. Of course, it has restarted, taking trial runs, and it should be up and running fully in next couple of weeks. But despite that 1.5 months of closure in Q3, the sales of that division has not stopped because it was able to completely outsource what it lost in production from outside and achieve the sales and the profit number. So that engine is working well, and we'll be able to take full advantage of that as well.
Okay, perfect. And on the deleveraging part for FY23, can we assume about 300-400 crores deleveraging for FY23 also?
Too early to say, but I think our drive will be to aim at bringing down the debt to closer to 1,011 crore in the next 12 to 18 months.
Sure.
May not be 1 year, but it may be 1.5 years, but around that time.
Sure. So by that time, we'll probably be at debt to EBITDA of about 1x or even less than that.
Hopefully, Sagar.
Yeah. Okay, sure. My last question is on this advanced material. So during the current quarter, on a Q-on-Q basis, we saw about 10% decline on the revenue front, while the margins were better off Q-on-Q.
Yes.
So just wanted to get some...
Yeah. Maybe Sagar, Samir, you want to answer or should I take it?
Yeah, sure. No. So Sagar, I think, see, there is, this business is, comprised of shipments going out, many cases to meet some project needs, or in many cases they are lumpy. So I would not read too much into it because especially around December, and with this being mostly export-oriented business, 5 containers kind of flip from a December billing to January and the picture changes. So there is no trend around that. It's just that, with logistics and things like that playing out, the numbers, played out the way they did.
Okay, understood. So on the margin front, then, so assuming that we would have done 300 crores, then our margins would have been better, right, because of the operating leverage?
That is correct.
Yes, correct.
That is correct.
Okay. So going forward in FY23, assuming a 20-25% top line growth, our EBITDA can be about 14 to 14.5% on the advanced material part, right? As the margins will improve from here.
There will be slight improvement in the margins for sure, but as the growth happens, there will be some increase in the fixed cost as well. So yes, there will be some growth for sure.
But broadly, it is on the rise, and it will rise. 30 basis point plus minus, but it is not we're not very off from where we are targeting.
Okay, sure. Sorry, sir, just last question. On this other segment where we saw this EBIT loss for the current quarter as well, as you guided for better, outlook on the water division, so FY23 onwards, can we, others division will turn profitable?
As I had explained in the last call also, that all of this will wear off by end of the year. After that, we will possibly not have this because our water division will start, generating surplus a bit.
Perfect. Okay, so we'll be positive EBIT from Q4 onwards itself.
Not Q4, from
Q1.
Q1, yes.
Okay, perfect. Great, Jayesh. Thank you so much, and all the best to the team. Thanks.
Thank you.
Thank you. The next question is from the line of Venkat Simala, Tata Asset Management. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, just one question on how do you see the structure of the orders moving forward? Obviously, in the last 12 to 18 months, especially in the fabrics, what we've seen is the skew towards exports has kind of increased, right? So, is that something which is structural moving forward as well?
I think one of the key, internal mandate to our teams has been to have a very strong, relationship with customers both globally and in India, and have that flexibility to move sales from domestic to export and vice versa to some extent, so that depending upon the demand situation, you can in a way, move your sales. So if you saw last year, we were impacted very badly in India in Q2 because of the Delta wave 2. And as a result, the demand had significantly reduced, both in retail as well as in the branded segment. So we kind of moved part of the sales into our export market, which was doing extremely well. Going forward, it could so happen that some of the markets, particularly US, which is so strong, may soften a little bit, either because some, the money which is flowing into consumers may go down, rates may go up. So the demand in the retail segment or even the logistics may improve, which today all brands are stocking up inventory, they need not stock up. So there may be a lull for a quarter in any of the period. I mean, within next 8-9 months, when this may happen, and that is a time one could, because we are present across India, Europe, and US, you could play in different markets and still fill up your capacity. So I think I would not call that there is a trend towards exports, but I think we continuously tactically, remain present and put our more sales into markets where we are at an advantageous situation. So it's not that it is a permanent change, but it is a good change for now, but it may reverse itself.
Right. So, sir, even just as a follow-up to that, so say even if it reverses, would there be a possibility that the new normal could be a little higher than what it is, or there may be a possibility that it could go back to the erstwhile levels also?
Normal, as in you mean the export may be higher or not? That's what you're asking.
Yeah. Structurally higher than what it used to be, or
I think structurally it will be higher for a simple reason that the shift in demand because of the China plus strategy is real, and I think we should take advantage of it, and we are taking advantage of it. So to answer your question, yes, it will always be more than what it used to be.
Understood. And
sir, my comment on that, just to elaborate, we work with a set of customers. Okay, and it's a B2B business where we are working with a lot of accounts over multiple years. So there are few prized customers like that in India as well, and we'll continue to serve that. The rest of the explanation thereby provided that depending on how the relative sort of demand plays out between all the accounts, the actual number will change.
Understood. Yeah. And now when I look at how you're kind of operating across different segments, so fabrics are running close to full capacity utilization levels. AMD also is doing well. So with respect to garment, and when I look at how the peers are doing versus how you're doing, right? So your commentary appears to be very strong, but at the same time, you are not really running at optimal capacity utilization levels, right? So what exactly, where exactly are you lagging? I know you're doing well, but I mean, whatever we are hearing from others, there is still room for improvement, right?
So I think let me clarify, which I did earlier also, that for us, garment business is a part of our vertical plan and not a standalone business. So we use garment as a service to get our stickiness with our customers and provide that extra service. So I think that's our starting point. And when we don't necessarily aim for a growth in garment, but we aim for overall growth in sales with a given customer. That's our starting point of our garment activities. It has always been a vertical thinking rather than a horizontal thinking of a garment as a business. So I think this is one difference compared to anyone else. Secondly, our garments volume are growing. They are growing at a reasonably good pace as well. Two things are happening, and one thing which is happening is that our Ethiopia is come under some political disturbance, and as a result, there is a little bit of a challenge there. And as a result, some of the capacities are underutilized today. The second thing which is happening is that some of our garment capacities, because of surge in demand in our advanced material division, where they also sell garments, which are the protective garments that they sell, we had to divert some of our capacity from our existing textile plants to advanced material, and that resulted into a dip in capacity. We don't report that because they are all small, relatively small thing as far as overall numbers are concerned. But our thrust on verticalization and garment continues. Our margins are improving quarter on quarter, and we will continue to grow that business.
Understood, sir. Understood. That kind of helps. Sir, one last question from my side is obviously you did mention about your maybe medium-term aspiration and utilization of maybe around 300 crore capex. But slightly, if I just look forward maybe 2, 3, 4 years, what is your aspiration to grow your top line across different segments? And by different segments, maybe you could talk about fabrics, garments, and AMD segment.
I think on a reasonably medium to long term, I think our fabric business would grow at between 5 and 7%. Garment could grow at around 15% to 20%, and AMD could grow at about 25 to 30%.
Understood. So then would you be able to kind of, get to maybe low double-digit kind of growth sustainably?
Close to that number is what we are aiming at least for the next few years.
Okay. Understood. Because, once you at least have that idea as to what needs to be done, based on that, you will also allocate your capex, right? So that is what...
Yeah, I mean, that's part of our job. That's part of our job, yeah.
Right. No, understood. Sure. Thank you. Thanks a lot. That's all from my side. Wish you all the best.
Pleasure. Thank you.
Thank you. The next question is from the line of Dipesh Agarwal from UTI Mutual Fund. Please go ahead.
Yeah. Good evening, gentlemen. My question is related to your land bank. I do appreciate your efforts on the monetization of land, but when I look your FY21 financials, almost your freehold land book value was roughly 1,200 crores. This is almost like 40-45% of your company's net worth. Can you help us understand out of this 100 crores of land bank, how much of the land is in excess of your requirement?
So I told you earlier that the total land now left, you are looking at 21. I mean, we are going to sell already done about 100 crores now. Our total the surplus land that we have identified, there are 2 types of land. One is the land which is part of our complexes, which we are currently not using but not planning to sell either. All of that being considered as part of our requirement, because it may be required, if not now, maybe 5 years from today. The land that we are intending to sell, the value in the book as we speak to 450 crores. And we will be declaring that land as investment land surplus in the March 22 balance sheet.
Okay. Any sense what would be the realizable market value of this 450 crores land bank?
Around 650 to 700 crores.
650 to 700 crores. Okay. And this we will monetize over next 3-4 years?
That's correct.
Understood. So second question is just a bookkeeping question. Typically, how many days of cotton inventory you keep?
There is no such, I would say, fixed number that we have in mind, because commodity, agri commodity, it keeps changing, based on availability, monsoon, all of those things. So we don't generally decide on number of days. I think we do, one thing which we do, that to the extent we sell, we try and cover through our cotton and yarn, so that we don't have too much negative variance on the already orders that we have booked, and try and reduce that, margin gain or loss on that. Other than that, based on certain requirements which are very typical for some of our customers, which may be, organic cotton, which may be very superfine and specialty cotton that we may be buying from various parts of the world. There we buy for 6-8 months, but those are very smaller, restricted quantity. So overall, today, if you were to ask me what is my cotton inventory, it is about 60 days.
60 days. So would it be fair?
It may change. I can't tell you that it will be 60 at the end of the month. So.
Okay. So would it fair to say, you mentioned there is a lead lag in passing on the cost increase on the fabric or the denim side. So this cotton inventory which you keep, which at the current moment is 60 days, is offsetting some of these lead lags?
That is correct.
It would be at least half of this lead lag being covered here?
I will not put that number because we are also buying yarn where we don't have cotton. More than 50% of our input is in form of yarn which we buy where we don't have cotton. We don't hold inventory for that material.
Understood.
So
the person you are speaking with has put your call on hold. Please stay on the line.
Please go ahead.
Yes, sir, please.
So I'm saying there is no such fixed thing about how much percentage would it cover or something like that. So it's a very daily dynamic thing. It will not be possible for me to quantify exactly the contribution based on inventory levels because I may have bought inventory at different points in time also.
Understood. That's it from my side. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Rishabh Jain from DSP Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good evening.
Good evening.
So I have just one. Good evening, sir. So just one question on the garmenting division, which you have explained is a little lower than other segments. But if you look at pre-pandemic scenario, most of the fabric division has grown significantly higher on a quarterly basis. In garmenting, it seems the recovery is, if you exclude the Ethiopia as well as maybe some AMD diversion, the recovery still looks significantly lower when we see the quarterly numbers, let's say 8-10 quarters back.
But so, the way to look at it, Resham, would be that in relation to what capacity we have, whether we are very close to the, what we could do. It is a headroom of 5, 7, 10% and not 30%, for example.
Okay. So we can, from the existing capacity, what we have, we can reach maybe 2,000 odd crores. Is that
Yeah, and we are, as we speak, we are also expanding.
Okay. Yeah. Existing, whatever is there, you can do around 2,000 odd crores.
Yeah. And we are expanding.
Okay. Understood, sir. That was the only question from my side.
Thank you.
Thank you. The next question is from the line of Biplav Devarma from Antique Stock Broking. Please go ahead.
Hello, sir. Sir, just two questions. One is on the PLI. Sir, PLI, if my understanding is correct, the last date for application is January 31st. Am I correct?
That is correct.
So by this time you might have you might have decided if you have decided to invest under PLI, that might have been decided. So you'll be announcing what you have planning to do under PLI.
Let the application go on 31st. It's already announced. I think honestly, I think you should, and that is true for all textile companies, and they could look at investments to grow in, whether it is through PLI or otherwise based on what businesses they are in. For example, one of the largest businesses that we are in is woven shirts and woven fabrics and denim and denim jeans. So none of them are in PLI, for example, right? So our thrust areas would be to do some of the man-made fiber, some of the technical textiles where we are there. But overall, we consider with or without PLI what we should be doing, and whatever falls in PLI would be applied under PLI. So, and the balance will go in the other government schemes, which are like top schemes, which are coming up again as of April. They are going to revise that entire scheme. So we'll be investing in garments or in some of the fabric capacities through the top scheme. and not through PLI.
So, how much would have been investment would have been in PLI based on?
So we will, as soon as we apply, we will let you know.
Okay, fine. Second question is on this land parcel. I just want a little bit flavor on the land parcel that you intend to sell. So a few questions on that is that whether it is within the city limits in 2-3 contiguous, a large chunk of 2-3 land parcels or a small land parcel in many. Because I was just trying to understand how liquid are this land parcel and how you are planning to monetize. You want to sell or as you have been doing JDA kind of thing?
No, we are selling, not doing JDA, and we will sell. So they are located in 2 or 3 areas, but not necessarily everything in that area is contiguous. But each one of the parcels that we have are fairly large.
And within the city limits, sir?
There are some in city limits, but largely around city.
Okay, sir. That's all from me. Thanks.
Thank you.
Thank you. Ladies and gentlemen, due to paucity of time, we take that as the last question for today. I would now like to hand the conference over to Mr. Samir for closing comments. Over to you, sir.
Sure, thank you. Thanks a lot, everybody, for joining us and presenting your questions. We'll look forward to meeting you once we're down. Thank you. Bye.
Thank you, everyone. Bye-bye. Thank you.
On behalf of Arvind Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.